the next few days of this week, same as the whole next week, are gonna be very, very excited in terms of what we have. So let's, before we start looking at charts, let's have a look what we are waiting for today. We are waiting for manufacturing sales out of Canada. We are waiting for housing data from US, building permits, housing starts. That's within the next 12 minutes, 13 minutes. Then at 4 p.m. after our meeting, there is a Bank of England Governor Carney speaks. So from the pound perspective, which is weakening based on few rumors during the Tokyo session that Hammond may resign because of the Theresa May spending plan. That was pound negative, and pound been hurt anyway. What else we have today? We do have GDT price index. That's for the New Zealand dollar traders awaiting the auction results, right? There was a spike on the dollar crosses, right? Dollar was a little bit weakened. It was based on the tweet from Mr. President Trump that European market rose on comments unfair to US made today by Mario D, right? So just to clarify the situation. And guys, it's recorded. You can check it. It was the first or second part today, right? I told you that it's not without the reason why Draghi is so active these days, all right, ahead of the FOMC. So there was talks about the more stimulus. So looks like some analysts already expecting another 20 basis point cut September. So Mr. President Trump very unhappy because of the weakening euro, right? So it's is a fair when the Mr. President Trump is manipulating the market. It's very unfair when others are trying, right? So, and we can easily call it free market. So I'm so excited. So today we know what we are waiting for, but the key events starts tomorrow with UK CPI during the morning European London session, with Canadian CPI after the New York Open, with another Draghi appearance tomorrow at 4 p.m. CET, and finally with FOMC at 8 and press conference 8:30 p.m. CET. So pretty busy Wednesday, but that's not all, right? During the next Thursday Tokyo session, there is a New Zealand GDP, Bank of Japan, and Bank of England, right? So busy Wednesday, busy Thursday, and Carney will try to be very active over the course of whole Thursday with the speech at 10 p.m. CET at the end of the New York session on Thursday. And the Friday, a little bit of easier, it's a PMI day, right? It's a PMI day. But still, that's the prelude to the last week of the June, last week of the second quarter, last week of the first half of the year, right? then where more fireworks may come into play. Because of the rebalancing, in my opinion, that's the key, right? Plus G20 ending the second quarter, ending the first half of the 2019. So it's gonna be, the G20 gonna be very, very interesting. Very interesting. Because we already know, right, that PBOC been called as FX manipulator, right? Because of where yuan is. Now ECB, EU, is called FX manipulator by the US. And if you wonder why stocks is higher and yen crosses are lower, right? I'm gonna give you the probable answer. Probable. I'm not saying it's true, but it's something I think worth to think a while. If you are a little bit longer on the market, right? Usually we know we call it invisible hands of the Bank of Japan. So I do remember, that was really some time ago. We had some gaps after the G20 on yen crosses, right? Depends on what was all about. So that's the conspiracy theory, right? That right now, Bank of Japan is manipulating their own currency against what they want. And the only reason is upcoming G20, right? So just not to be named as an FX manipulator ahead of the G20. If nothing is going to happen after G20, who knows where we are going to open? Who knows where we are going to open? That's conspiracy theory, right? That's conspiracy theory. Now, we are doing the webinar from the webinar room. You're more than welcome to join. We do have a webinar chat, so you are more than welcome to ask the questions. Unfortunately, I'm not seeing the questions on YouTube. We are streaming this webinar live, but in case of the question, please log in to the webinar room, so then we can have a discussion here. All right, we are waiting for US data. So we made, based on the details we discussed today, right? Colors, possible supply, possible demand, more stuff, tricks, shadow game of the shadows. We discussed it about the euro dollar. Euro dollar is approaching much lower levels for now. I'm not gonna be surprised if we will try to react around the high and the open we've seen on the 29th of the May, but taking into the consideration some kind of the more stop hunt to the downside, we cannot rule it out 11.15. Where the possible supply, blue dotted line, weekly open, the range from the 5th of June, but we narrowed that range into what we have here, the green color, right? So webinar is recorded, so it should be available in the archive section on the Light Forex Global YouTube channel. Should be available within the next day or two. So then you can get back and check what we were talking about. To be honest with you, I'm not saying that because yesterday, am I right? It was yesterday, or maybe it was very late of last week. I've mentioned that, yeah, because of the Friday data, it was yesterday. I don't think that we are going to see the cut from the FOMC side. I don't think that that the pressure from the Trump administration will do anything. But I'm not gonna be surprised now, taking into the consideration the whole action, this week action, right? It might be now, I think we might see a little bit of the dovishness inside the statement. I truly believe it might be the case right now, but not because of the President Trump, because of the overall situation, because of this tensions, growing tensions. It's not only China, it's right now, it's Europe, right? It's Iran. So I'm not gonna be surprised. Till yes, still my stance is there is no reason why Fed should be taking into consideration what is going on in US, right? The rest of the world been hurt and trying to avoid new financial crisis, especially around the developing countries, I mean emerging markets, right? Here probably that's, I mean, if the Fed is going to be dovish tomorrow, it's probably going to be related to the emerging markets and all this stuff around going on right now, and all these growing tensions, China, Europe. That's how I see it. Just inside US domestically, there is nothing to be dovish about right now. So that's the only possibility I can see, in my opinion, right now. It might easily change within the next month or 3 months, within the third quarter. That's how I see the things. But you know, I told you many times I'm not that typical macro guy. I do prefer check the charts. So I might not be, you know, that right. Anyway, let's have a look what we have in terms of the housing data from US. 1 second. In the meantime, Chancellor Merkel quite active right now. Building permits 1.294, actual forecast 1.29, so a little bit better, and yeah, and a little bit better than what the market was expecting. The same as the previous one. Okay. I'm going to try to put it on the chat. 1 second. That's the full data. So we're talking euro dollar, possible supply eventually on a rally back towards the weekly open. So let's have a look how it looks from the intraday perspective. Weekly open, it's also very close. Something we discussed previously, right? This trick with something looks like head and shoulders or inverted head and shoulders. So we already reacted based on this. We're trying to double the original intraday range based on what we've seen yesterday and today. We broke to the downside after the Draghi speech. We do have possible intraday demand down towards 1170, but as I mentioned before, I would be very, very careful here because we have the demand from the daily chart a little bit lower, right? The green zone, so the green color based on the daily chart, what is going on the daily chart. So here I would be very, very careful with this 1170, as I do believe market may want to even, right, before any attempt to bounce, market may want to try to hit some stops looking for liquidity. But to be honest with you, overall, I would prefer to sell some kind of the spikes right now. That's how I see euro dollar. Based on what we discussed on weekly, there is still room towards 110 and below 110, right? A little bit. Whoa. What is going on? Another attempt to move higher. So let's check the news services. That's how it's going to be over the course of the day. Nothing extra. I don't know what was the reason of that spike. At least I can't see it right now. Anyway, pound is trying to recover. We didn't make the full analysis of the pound, but we are going to have a time ahead of the Bank of England, and tomorrow ahead of the UK CPI. So for sure we are going to go that deep the same way as we did with euro dollar. For now, from the daily perspective, there is a possibility that's without upper shadow. If you remember, the price action we've seen 11th of December 2018, right? With this spike at the very beginning of the year, right, to the downside. And if that might be some kind of the over-under, so there is still a little bit of the space, but overall that's how the whole possible demand here looks like. And there was reaction the last day of May, 31st of the May, almost there, with quite strong reaction to the upside. And since here, right, once we got back below 27, that's where I've been hurt by the pound. Wrong read of the market. Well, it happened. Anyway, as of now, that's the latest line in the sand here for the pound traders, in my opinion, within this green zone, right? The thing is that we are already well below the weekly open blue dotted line, 2578, 2580. That's the key to get back above and trying to grab the breath, trying to take the breath, right? So overall, from that perspective, what is needed today, and we discussed the swings and how to approach few things. If we are going to get the close above yesterday close or yesterday low, but it's almost equal, if the market is going to be able to get back above yesterday low on a daily basis, that might be the first sign of the positive development, right? For the upcoming days ahead of the CPI, ahead of the Bank of England, right? But we do know it might be short-lived because of the whole Brexit mess, because of this preparation for the new Prime Minister and many, many other things going on inside in UK, right? But anyway, from the daily perspective, move back first above yesterday close. That's gonna be the first good sign. The second good sign, just the sign which might delay another run to the downside, would be the daily close above the weekly open, right? So some kind of the reversal based on the weekly chart, right? Why? Very easy answer. If you remember what we discussed during the second part today, during the second part, when we were discussing swings, right? So look here. Look at the price action from the 30th of May, price action from the 31st of May, right? And the June 3rd, right? We didn't quite make the ideal swing low, right? So there was a chance on Friday with this low close. The Tokyo was trying to push price higher, right? So we finished that business and there was an attempt to go higher. And we broke through, right? So now we know where the supply resides, right? Based on this broken, unfinished business, meaning that today, daily close above yesterday low, that's the first step, but much more important to close above this price action, above this broken swing low here. That's two important tasks for pound bulls, if there are any of them left. Switching lower, that's the Tokyo spike lower based on the rumor about the Hammond resignation, right? Now we've got very nice stop count. So taking into the consideration intraday price action, we're trying to build very nice range, right? Trying to build very nice range. Now let me try to explain you my way of thinking here. Overall, based on this week price action, so what we've seen yesterday, it was the drop, base, drop, right? During the Tokyo session. Right, nice equal moves. So we just hit the stops for now. So that's the overall price action from the beginning of this week, taking into the consideration the bias to the downside from what is going on for quite some time, right? Now, what is going on since we hit, or since we had this spike to the downside, right? Over the course of the Tokyo, after the spike to the downside, late Tokyo, beginning of Europe, attempt to get back into the intraday high, right? Another push lower, another retest of this consolidation. Now New York Open, attempt to go lower. So for sure, what happened? For sure, we took out at least the stops from the Tokyo low, right? So what we have on the chart? So that's the spike to the downside. That's the spike to the downside during the Tokyo, right? And attempt to move higher, right? So that's what we have here, the Tokyo low, right? And it was the low for the whole European session till New York Open, right? Then the guys in New York decided at least to take out these stops, all right? And looks like we're trying to reverse this. So we are above this Tokyo low. Now, what is needed to try to stabilize the pound here? What is needed? First, early close above this Tokyo low. So that's going to confirm this stop count only, right? Now, from the previous meetings, we know that either temporary or permanent change may take place once some liquidity pool into one direction been found, right? In other words, trying to make it much more clearer, we can see the turnaround on the market, either permanent or temporary, once we hit the stops in one direction, right? Probably the first attempt was during the Tokyo session spike down based on the news. Now New York was hit that stops. So the good thing from the stabilization perspective would be the early close above this level. Even better, from the swing low perspective, even better is gonna be close at least above previous early low. So let's place the line here. Okay. Then we know that overall we are inside the green zone. And the green zone is related to the daily chart. As we were falling, we hit, in that case, we know that we hit daily possible demand zone here, all right? So trying to summarize the pound, negative, of course, but we hit possible demand based on the daily. We're trying to consolidate, and we do intraday price action related to some kind of the stop count over here, right? So in that case, at least for now, if we are going to create that swing low, if we can agree that this is the consolidation over the course of the day today, and in case of this swing low being created, we might see at the very first stage, of course, retest of the top of that range, right? Now, based on what we discussed, all right, now Game of the shadows is back, right? What we discussed, from where the market here on the hourly showed the latest weakness. So we hit these stops from that high here, okay? That's the latest market weakness. We will switch lower soon to the lower time frame, right? So we do have some kind of the swing high creation over here, but there is no ideal equal high in between this candle, right? It's not the great example because of the two things. It's not a great example, but I'm going to explain in a second. We might expect some supply here. It would be better if that swing high was the highest inside this consolidation, right? And there is one more, this one, which we can treat as a swing to the downside, another swing to the, so double swing. So I do expect some kind of the supply, intraday supply here, based on the range approach. And in case of the range break to the upside, the minimum size of the move, I'm not taking into the consideration upper and lower shadows, just bodies. Okay, so in case market will be able to break a little bit higher, we should double the size of the original range. In that case, guess what? Oh no. We do have inside this drop hopefully it's gonna be clear right now after such a deep British pound analysis. I truly believe it will. So we have a drop yesterday. Then we agreed that we have a base. And then we had another drop. That's perfectly clear, right? Now, the first thing first, if we want to take the advantage of this base drop base setup, right? It might be challenged because we are inside the demand from the higher time frame. But let's assume, for the just as an example, purpose of this example, that we are not inside the daily demand zone, that we have a space to the downside, right? The full analysis with it using very simple tools, right? Not some oscillators crossing, moving averages, turning. Of course, it's taking the time, but once you are going to get what I'm talking about, you will be able to make that analysis within 2 minutes. So assuming that during the day we are inside the range, we know where we can expect some supply based on the intraday price action. But in case of the break to the upside, I wouldn't say it's like usual stuff, but it's very often what is going on, that we are doubling the distance of the original range. So in that case, if that's the case, if we are going to see the rally based on the stop count to the downside, so it might be that market found liquidity pool and may try to run away from that point. So in case we will move higher, looks like where we can expect some kind of the reaction within this setup, drop, base, drop, right? Now, what's significant inside that base is, it's quite wide, right? So in case of trying to approach that base right at the bottom, it's like 16 pips. One can argue, oh, come on, 16 pips. Good. But I'm going to show you how you can manage that risk, how you can narrower based on what we discuss over the course of today's meetings. Right. What we missed here, that's my way of thinking. I'm not saying it's gonna work 100% of the time, but with proper risk management and active position management, there is a chance it's gonna work your way. If we are going to do that way, as we can see, it's unfinished business. It's unfinished business over here. So I may try to be based on this nice possible swing high finishing business over here. I might be here, but there is one more thing. All right. The size of the move, we might stop in case of algo will try to trade to the pip based on this doubling the size of the original range. We might, with spikes, it might be even higher, but taking into the consideration just bodies, right? That's what we have here. And again, we discuss it, right? We have attempt to create the low over here. So I'm going to remove these arrows. Let's talk about what happened here. So we had yesterday late New York session. We had attempt to, let's call it, to make the equal bottom right here. And actually, if I'm going to, we can try to call it that there was attempt to create double bottom. Anyway, the bounce here was very weak. It was like 30% of the range of this candle to the downside with weekly open break, right? So what happened here, that the late New York broke through that level and never looked back. What does it mean, never look back? As we discussed, in between pre-breakdown and after the breakdown, right? We didn't retest either this equal low or this low from that candle. So that might be, all right, over here, eventually closing the gap. So in that case, it might be, instead of having this wide range, right, we can narrow a bit that range. I do prefer finishing the business over here. So I do prefer something closer to 25.65. All right. But I'm not going to be surprised if the reaction is going to be, in case of the stronger pound, strong reaction 10 pips lower, right? But especially we are approaching first thing first, within next hour, option expiration, right? First, US cash open, option expiration, London fix, right? So I'm not going to be surprised to see higher levels. So I'm going to watch from that perspective. In case I'll try to take the chance to sell the pound on rallies. So I would look for something closer to 65, right?